What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 2nd of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and more importantly, for those of you who are celebrating it, I hope you're having a great Labor Day wherever you are, and I'm glad you're spending some of that time here on the DataDash channel. It's always appreciated. I love that you guys love to hear me ramble. Anyways, we've got a lot of different things to talk about in this video. We'll be taking a look at not only price action of both crypto and equity markets, but also dive into a variety of headlines talking about a potential wedge that we're building into, or a more bearish technical pattern that means that we might have a longer period of consolidation for cryptocurrencies, and then also taking a look at traditional equity markets and talking about how we're starting to see a dip or recession hints in other markets in Asia predominantly that are signaling that we might be heading towards a global slowdown in equities and other types of assets. So we've got a lot of things to discuss, guys. We got no sponsor today, but I do want to start off the video with something that's very fitting with Labor Day. And this is the difference between the Great Prosperity and the Great Regression. A very interesting chart here that showcases the almost, just straight line here of productivity over the last few decades in America. But over the last few years as well, the flatlining in compensation and hourly wages. Now, the reason I bring this up is not to complain so much about the haves and the have-nots. It's to showcase that over the last few decades, especially during the 70s and 80s, once we broke off of the gold standard, interestingly enough, but also, I guess, as well with a lot of other factors like automation and things of the sort that could lead to increase in productivity and actually lead to less labor being created in the market. We have had this huge divergence that has really, over the last few decades, destroyed the middle class. And I think a lot of it, honestly, we give a lot of credit to automation. And I do agree, either jobs getting shipped overseas to cheaper labor countries, or for example, into machinery that has reduced the need of humans to build things. I think it plays a role, but I also believe as well that what has led to such a huge divergence in this case has been the break off of sound money, the purchasing power of the average dollar. And I think that's an important thing to take into mind. You guys may agree or disagree. I'd love to know in the comments, just to get a discussion going. That's really what I like to do with you guys, is just to hear what you guys think has really led to this right here. And then also has led towards kind of the divergence in wealth and destruction of the middle class in the U.S. Because I think it's a very important thing. I think any economy, in order for it to be sound, needs to have a sound, healthy middle class in that case. But again, would love to know what you guys think about that. But going on here to talk about more of a more important topic for, I guess, most of us here, cryptocurrency markets. As we can see, most cryptocurrencies are in a no-trend scenario between 1 to 2% to the upside or downside. And because of that, we are not seeing crypto markets changing too much. We'll take a look here at the yearly. Again, we're starting to see a curve up here as Bitcoin has gone from around 9,300 to 9,800, about a $500 increase here over the last few days. Slow incremental moves to the upside, looking like we might be again setting another level here on the lower side of the wedge. We'll talk about that as we go and take a look at the chart here. It's a little bit lower than our line that we technically had. If we take a look here at market dominance, it looks like Bitcoin might be able to press above the 70% level. We'll have to wait and see what happens here. Again, it looks like it has a chance to really set up for a breakout here to continue higher. But I'm looking again to see if we're going to get one of those 1 to 2% dip days. I know I'm so hopeful, but again, until we see a really solid close above, say, 71%, I think that there's still a good chance here. So not rushing to any conclusions. We will have to see. I'm waiting patiently for this. And I've got positions in both Bitcoin and altcoins, so it's not going to be the end of the world. But again, keeping an eye out for that. So again, even though the market looks quite bloody here, we have recovered a decent amount across the board for some altcoins. Again, we had a pretty stark sell-off in most plays, down 15%. So now you're starting to see some of the altcoins recover here. Ethereum only down 9% over the last 7 days. Litecoin down a little over 10%. EOS down 9%. And Bitcoin around 5% to the downside. So again, I think nothing that we're, not used to in crypto in this case. But at the same time, I wish I had more cash at the moment to average in. Just haven't been doing much averaging in over the last week or so, as I've been putting money into my startup at the moment. But outside of that, taking a look here at the chart, guys, the biggest thing here for the bulls that's going to be important is getting above these moving averages. So I've talked about the importance of holding on the 100-day moving average. In this case, we were holding on here for a few days, and sadly we broke through, and we also broke through really what I would say is the bottom part of the wedge here, the line of support here with the rising lows. The thing that even makes me more concerned, if I take a look, now we're taking a look, of course, at Bitstamp, but if I take a look across most exchanges, volume has been relatively minimal over the last few days. So what's going to be very important here is for price to really show and to volume for volume to come into the equation as well and get above these different moving averages from the 21 to the 50 to the 100 day. And also, again, it's getting easier here, bear in mind, as time progresses for us to get above this line of resistance, this component of the wedge here, if you want to call it, if you want to see it as part of the wedge, whatever it may be. I digress. That's the key thing here, is to get above these moving averages and for a solidification for us to continue the rally and really pick up new highs, hopefully above 13 or 14,000, whatever you want to consider the high. Then in that case, that's what we're looking for. Just very simple things, not overcomplicating the chart. And there's a really interesting article that came out. I had seen the original tweet that it's based around. Again, we've got another crypto Twitter article where they basically use tweets as kind of the main source material. But I think out of all people, if you're going to use it, it should be around Raoul Pal, who's a really awesome individual. I've been keeping up with his company, Real Vision, for a while. They do these really awesome interviews. If you guys haven't checked them out, you should. But Raoul Pal basically found a Real Vision that does all these excessively interesting interviews with people from kind of the higher echelon of finance that traditional media either doesn't cover or can't usually get to cover. And they have really good questions and discussions. I just want to, I'm not trying to shill it by any means, but you should definitely go check out some of their free content if you want to get a taste for what they have. They got a lot of stuff on YouTube, a lot of big interviews they got recently. Anyways, Raoul Pal put out this really interesting tweet where he said, if you don't have any Bitcoin, then this looks like the last time to board the rocket ship. I love wedge patterns like this. Raoul and I see eye to eye on this. They have a high probability of success. Good luck. There is a shit ton going on in the macro land. Pardon my language, but it's true. I mean, Raoul has, been mentioning again how hedging assets like gold and silver and Bitcoin, and as well, how U.S. markets, again, are kind of on the kind of top tier level comparative to other markets. Very similar things to what we mentioned and what we talked about with Alex from Nuggets News. This idea that people are now starting to look for the strength-based assets right now, the assets that will allow you to actually be able to retain, if not gain, in a market where there's excessive fear. There's going to be excessive shifts in valuation and the broader range of equity markets and assets such as properties and the bond market. He's been talking about this stuff for a long time. And he finally feels that we're starting to get towards that picture of a recession coming around the corner. He takes a deep look at economic data, things of that sort. And again, I'm going to try to keep it short here, guys. The main point here is that you should keep your TA simple. I'm not going to tell you guys how you should trade, how you should invest, but keep your technical analysis simple. Don't overcomplicate it. There's no need to. I mean, you can very clearly see here that there is a wedging pattern going on here for Bitcoin. And again, there's no need to make it too complex. Okay. And now there's another good perspective here, and I think the most important thing you should do here is that obviously it's very good to keep your TA simple, but at the same time, you don't want to let your bias get in the way, right? And there's a really interesting chart that I saw here that someone made as a reply to Raoul. I actually got a good amount of likes and retweets, playing the contrarian view here. And I always love things like this. So for example, what they did here is they showcased the previous cycle back here in 2015 and 2016, the exit out of the bear market in this case, or the kind of accumulation phase and stuff back to the all-time highs. And interestingly enough, they brought up this fact that there was, again, this kind of parabolic run-up from around 200 up here towards 400, and then we had this wedging phase here and a greater ascending triangle in this case. So that's the kind of thing that they pointed out here, that it took a little bit longer to get there in order to have the continued breakout that I think many of us are looking for probably in the next few weeks. But the thing that I want to emphasize here, as much as I like, again, he used basically, this is a chart pattern here. So he took the previous one here, laid it out over the current time frame. And you can see that this could play out very similar to history. The thing I don't like about this, and it's very important to note, is that the time frame is very different. So whereas, for example, this price range between this line here and here is 3 months or a quarter of the year, from here to here is half a year, right? So he squeezed the chart. It's very important to note these things. And this is a problem that some people had when they used the gold chart and compared it to Bitcoin when gold got the Bitcoin ETF, when gold got an ETF, and they were comparing like, oh, this is when the Bitcoin ETF will come out, and this is what happens to price. It was a very manipulated chart, but at the same time, I think it showed a that, there's a possibility we could see something similar because Bitcoin is a much more fast growing market than gold in this case, in the sense of gold being around for hundreds of years, in the sense of, store of value and used for commerce. In this case, Bitcoin is something much newer and it's much faster. It accelerates with the internet. That's the theory. But with the internet, you can have accelerations of technologies much faster. But that's not always the case. It really depends on how easy it is to scale it and get it into the hands of people. 10 years later, we've only got less than 1% of the world, a fraction of 1% of the world owning some form of crypto. We've got a long way to go. All right, so there's some very important news here. And again, some people would say this is why Bitcoin is going up right now. And I'd say it's maybe why you'd see some premiums on things like local Bitcoins and a lot of local websites for cryptocurrency, peer-to-peer exchanging. But amid Argentina's crazy currency crisis that they've had, a continued and very sad, sad example of, again, governments mismanaging their monetary policy and their fiscal policy. We have seen restrictions on fiat cross-border remittance. Now, this isn't as probably as big as some people make it out to be. They've limited that you can only exchange around $10,000 of currency across borders, so $10,000 per month. And now the one thing I'd like to look into is whether or not this is US dollars or if this is Argentina peso in this case. It looks like so far that this is dollars. So you can only exchange about $120,000 per year. I think that's good for most people. So that's why I don't really think this is really big news at the moment. What I will say is that it's a warning sign that the government is inflicting capital controls, and that over time, as things get worse in Argentina's crisis, we've already seen this has just really been the beginning over the last year that we've been following this since back in 2018, in the summer of 2018. It's been a problem for a very long time. As this gets progressively worse, they will inflict stricter and stricter capital control policies. We've seen this in Venezuela and a lot of other countries that are going through the same exact problem in different various fashions and for different reasons. But no matter what, it's a protection mechanism for governments who have mismanaged their monetary policy and fiscal policy to protect the value of their currency. And again, it's only going to be greater fuel for Bitcoin. So long as there are ways for people to get around to it through applications, peer-to-peer exchanges, they will try to flee their capital out of the economy. All right. So one thing I want to talk about here is not so much that I'm really excited for. I don't know too much about it, but I wanted to share this with you guys. Bitcoin.com, that's obviously owned by Roger Ver, is opening a new cryptocurrency exchange. And I got to say, the only thing that I wanted to mention about this, guys, that I thought was worth mentioning is that Bitcoin.com is a very important domain, and I'm really curious to see where they're going to go with this. Supposedly, they have negative fee trading, where you're basically getting paid to trade. I don't know how long that's going to last. But they also have, again, this very important domain that's going to be, I think, a big advantage for them. So I'm just going to be keeping up an eye with what they're doing with this. I don't have much to say on it, but I just thought I'd share it with you. And again, you guys are welcome to read through the article here. They've already got like 11,000 pre-registered signups. All right. So taking a look here at traditional markets, let's go ahead and take a look at the futures. Futures are trading down, negative 0.2% here, basically 1/5 of a percentage point. Again, nothing crazy going on right now, basically closing down, again, what would have brought us back up to neutral territory here, going back down again on the hourly. It still seems like now, if we take a look at the daily or the weekly, doesn't really matter, that we're just simply pushing sideways. There's still the shaky uncertainty with what's going on in the trade war, with monetary policy in Europe. The banking sector, again, is treading on thin lines, as we've showcased here on the channel. But again, markets just don't look very confident to me. And this is U.S. markets. U.S. markets have probably been one of the major leaders here. If we take a look at the world indices, again, we can see a very clear picture. Sorry, I'm going to take a look at the major indices here. We can see here that, again, markets have just been relatively up and down for the most part. And we're only going to get the 24 hours here, but we've been seeing a lot of these huge negative 2 to 3% days, and we get some recovery days, usually 1 to 1.5%. So there is some rebounds. I guess this is the right proper tab. I should have clicked on indice futures so we can get a good picture of what's going on the global stage. Right now, it seems India markets right now, as well as Singapore, so a lot of Asia right now, feeling a little bit of pain in the market, worries around the trade war, slowing down economic growth, as well as the Hang Seng Index right here for Hong Kong. Other markets that are leading, European markets right now, seeing a lot of big rebounds here across the board from the major Euro indexes down to individual countries here like Switzerland, Germany, and France. So European markets leading at the moment. But I want to take a look at the Nasdaq Composite because there's something very interesting to take into mind here. A big amount of the Nasdaq now, especially ETFs like the Triple Q, which a lot of people own as a kind of passive investing in their portfolio, or as a diversified branch to get exposure to tech markets. You know, a lot of this is made up of the FANG stocks, Facebook, Amazon. Some people like to tie in a second A, which is Apple, Netflix, and Google. And they've played a very integral role because they are major tech companies. Amazon has completely changed the supply chain logistics system in the United States and has now made it standard for retailers to provide shipping of goods in 1 to 2 days. It has absolutely grown and it's become a behemoth of a company. Along with that, you know, Facebook is still in our lives, whether it be through Facebook or through Instagram, whatever it may be. Netflix completely changed the media landscape, as well as Amazon as well. Amazon kind of follows suit. And Google is still the major browser provider in the world and the major ad market of the world, right? Well, what I look at is this wedge. And again, I have two different lines here. And again, you can take whatever line you want. You can say that we've already gone below the wedge here, this ascending wedge, or that we're still in it. Doesn't really matter. Either way, we're getting very close to either a big breakout or a breakdown here. Ascending wedges tend to be breakdowns. And again, there is an opportunity where U.S. markets might be able, if the Fed plays right in mid-September, which this wedge is leading up to, if they play their cards right with monetary policy, equities, I have no doubt, could still go up. But there is going to be a very significant move. And when I take a look at some of the indicators across the market that I look for small cap risk. I'm not seeing it. Third time was not a charm. That's why I put the right in the newsletter when I basically put out this chart. We're setting lower lows here. Continuous resistance on the Russell 2000. This is the small cap index, 2,000 small cap companies. Small caps should be rallying if risk taking is going on, if the market is getting more confident. And if I take a look at even the safer place for the Nasdaq, take a look, we'll go through the FANG stocks, Facebook. All right, we're going to go and take it to the weekly here and make it a little bit clear. Lower highs. This looks like a topping to me. Facebook hasn't moved in the last 2 years. It's been 2 years, and we're still around the same price range. Amazon, probably one of the scariest looking charts to me. Even though, for example, it's a very short period of time, to be fair, and I've said this for crypto markets in the past, so I want to be fair. There is a very short period of time where you would have bought Amazon and been down. Lower highs. And again, looks like it's turning over here. This is not good. We've basically flatlined over the past year. No serious momentum, whereas this has been exponential. So the theory here is that after you've had exponential price action and you start to flatline like that, it's a very clear top, especially this. This is a double top. There's no doubt about it. There's a chance, again, that, you know, miraculously it could break through and continue higher. But you can even take a look at the logarithmic chart. That doesn't look very good to me. It looks very similar to what happened during the dot-com era, where markets started to top. That's the only other time period here on this chart where we had a very clear double top here in history. I can't find anywhere else. Right? Taking a look at the other A that we could have, Apple, lower highs. Right? Looking like it probably needs to come back and test the support line that set some of the previous lows in the past. And with the highs being up here around 230, coming down here to around, 125, 115, somewhere around this range down here would be good. Somewhere 40, 50% correction. Again, doesn't mean that Apple has to fail as a company. Netflix as well. One of the uglier charts alongside Amazon. Take a look at this. This looks like it's already on its way to the 50% correction here, right? Going up here at around 420. Somewhere, I think, around 200 to 210 is really where you're going to find your bottom here for Netflix. But I think that would be a fair buy, honestly, with how big Netflix is, with how much content it's coming out with. Again, I would definitely possibly take a risk there, just me personally. And last but not least, Google. This has just been a pitiful chart. Like over last year, again, wonky, up and down price action. Again, looking like it needs to come down to a support level like 800, right? Not even, again, a 40 or 50% correction. It's nothing huge. That's around a 33% correction, a little bit more than 33% correction from the highs. So my point here is that when small cap plays and riskier moves in the market are not enough to keep up equities, you're looking elsewhere for capital inflows, and that's in the big tech companies. And quite frankly, as much as they become a central and integral part to the Nasdaq and to these big tech indicators or indexes, they're not carrying the market like they used to. We don't have the fuel that we used to depend on. The stock buybacks, a lot of these things are starting to falter through as corporate profits are slowing. So we're seeing, again, not only the underlying symptoms of a slowdown in the economy, but we're also seeing that can have an inevitable impact on the inflows to equity markets. I hope I'm making that clear, guys. But again, this is very, very fascinating to watch. And again, it's not just in the Nasdaq. You take a look at the S&P 500. We're here on the weekly. Again, the same kind of choppy price action, the very big uncertainty in the markets. You see in the Dow Jones as well, same kind of price action. And when I take a look at things like the VIX is holding right on this line that I've had here and written in my newsletter from the previous month, looking towards this month here as far back as July, when I was writing the July newsletter for August. We've had this line here. And what it looks like it's doing is just like gold. It's making new supports. So the VIX is saying, look, we've retraced a little bit, but I'm ready to start moving back up again. This is not going to be another revisit back here to 12 or 11 here on the key support we've held for a while. It looks like it wants to start moving higher and retesting one of these previous levels that it's had in the past, which means very big sell-off is likely to come to markets if that's the case, right? Anyways, guys, that's it for the video. I want to share one last thing with you guys. I did a really cool sit-down with Brad Laurie, or Blockchain Brad, who you guys probably know him as. He's an Australian YouTuber. He's been a good friend of mine in the crypto space, probably one of the most truthful, honest individuals that I've met in the space, who's just about trying to bring truth and transparency to crypto. And we had, I have no doubt it was probably like an hour and a half conversation. I've got to still go back and watch a little bit of it myself, but we had a great time talking. So I'll leave that link down below in the description for you guys to check it out. But until the next video, guys, thank you all so much for watching. If you can, drop a like. Leave a comment down below what you guys think about the topics we discussed. What are you watching in the sense of traditional equities, commodity markets, Bitcoin, cryptocurrencies? I'd love to know what's got on your mind at the moment. What are you watching? What are you charting at the moment on this Labor Day extension of your weekend? I'd love to know. But anyways, guys, I hope you're doing well. And again, I will see you all in the next video. Stay tuned.